Cooked. Donald Trump's case against Lisa Cook might be cooked. Or is it? We'll talk about both sides, as well as UBS's take that we are a 93% or in a 93% likelihood of going into recession. Is that truly what they believe? Spoiler, it's not. And Donald Trump probably isn't going to get anywhere with Lisa Cook, and we're probably going to get 25 basis points next week. Let's talk about it. Okay, first thing that I want to hit on is Lisa Cook and break this down for you. Quick note, some of you have been asking me for a really good bank, though. In the meantime, metkevin.com, or just go to meetkevin.com/bank. Love this one. Meetkevin.com/life for life insurance, and meetkevin.com/Weeble. They're doing a 2% deposit bonus right now. Robinhood's only doing 1%, so you get, an extra percent if you deposit transfer over there. Check out those sponsors, Bank, Life, and Weeble. Meetkevin.com, all sponsors. Okay, so right now you've got this argument that Lisa Cook signed for 2 principal residences. And what we did is we tried to dig into this a few weeks ago to catch you up. Polte says she applied for 2 homeowner-occupied mortgages in 2021 within weeks of each other. Polte says we're doing our job and nobody is above the law, and therefore we're referring her for criminal prosecution. This is occupancy fraud, and she should be replaced. And the reality is she did have a primary residence mortgage here from June 18th that indicated she would occupy the property as a principal residence. But the big question, and this is the property we do not have the mortgage documents for, is why just 14 days later she applied for a loan for a property in Georgia, a condo. And on July 21st, that mortgage ended up closing, or that purchase ended up closing, which doesn't look good if both of those are primary residences. Now, we don't have the mortgage documents for that July 21st closing, but what we do have is that the loan amount against the property looks like it was a 10% down loan, which you could do a 10% down loan on a personal residence that you're going to occupy or on a second home. So all we know is it was either a personal residence that she was going to occupy, which would be wrong, or it was a second home. And that's where things left off the last time around, though it certainly didn't look great because optically that second home in Georgia has now been turned into a rental, though that is not against the law or any kind of loan rules. As long as you intend for something to be a secondary residence or a primary residence for at least a year, and then you rent it out, no harm, no foul. That's totally fine. And it was at least a year before we started seeing a rental listing. So then we get to the latest revelation that, wait a minute, was Lisa Cook up front in suggesting that this was actually a second home? And this is where there's a big debate. See, Bloomberg is reporting, thanks to what Reuters found out, that in May, Lisa Cook actually had a loan estimate issued by a credit union to Cook weeks before she ultimately purchased the home in Georgia. And the document said that it would be a second home. Now, this is a loan estimate. So we have to understand a little bit of the timing of this. And so, as usual, I broke down some of this extra information under the data section of the Meet Kevin app. So if you haven't used that yet, consider using the Meet Kevin app. I think there are also a couple coupons left. We have a quantity of coupons left for the Meet Kevin membership. So even though we had an expiration last night, I think there are 2 coupons left. If you want those, go to meetkevin.com. But make sure you have this Meet Kevin app right here. Okay, so look at this. What you want to look at here is you want to go to the loan application process. So when you apply for a loan, after 3 days of an application, you get a loan estimate. And then 3 days before closing, you get what's called a closing disclosure. Now, this matters. Now, as somebody who used to be a mortgage loan originator, an MLO, in English, a lender, we used to do these documents. So the loan estimate could just be one of many variations of loan estimates. However, the final mortgage documents are the final documents that matter. So I could get an estimate for 3 different types of loans, theoretically. So while a loan estimate does suggest that Lisa Cook at one point told this credit union that this property was going to be a second home, it doesn't guarantee that the loan was actually closed as a second home. And this is where Bill Pulte is sort of doing the classic Pulte line. And he goes now as far as saying that Dr. Cook represents herself as an extremely accomplished financial operator. If Cook solicited estimates as a vacation home and then entered into a mortgage agreement as a primary, that is extremely concerning and evidences further intent to defraud. Now, that's because Pulte is now playing defense, because these Reuters docs coming out are saying, Nick T is even retweeting these. Nick T is going, hey, here are the time frames for her to potentially get kicked out before this Fed meeting coming up on the 17th. Maybe it'll happen, maybe it won't. I'll give you my opinion on it in just a moment. But Pulte is also arguing, Nick T rather, is indicating, hey, this is a loan estimate that indicates that she disclosed that this was a vacation home. Of course, after Pulte's commentary, which he's got a whole stream of, people are now writing, so if the actual loan documents differ from the estimate, isn't that even more damning? Maybe. And so this is kind of where you're getting like attack and counterattack. Pulte goes, she's a fraud. She has 2 primary residences. She's like, no, bro, here's an estimate saying I disclosed there was a second home. And then he's like, oh, well, then why did you close it as a primary residence? That's even more fraud. And what this all really comes down to is the reality that there is an actual mortgage document somewhere. We don't have access to it for some reason. The title reports don't give us access to that Georgia home mortgage document. I've got the address. I've looked it up. I can't get it. And Bill Pulte is not providing the actual mortgage document, which is weird because if he was so damn convinced that she actually applied for 2 primary residences and closed 2 primary residence loans, then why not just show the document? But then the same would go for Lisa Cook. Hey, if you have your mortgage document, why not just show it? Now, it's possible here that maybe Lisa Cook didn't keep her mortgage documents, but Bill Pulte, as the head of the FHFA, should have the documents because it's the housing agency that would keep and store these loan documents. And certainly some title company somewhere should have these documents, but ultimately the title company just verifies that the deed is present. The actual mortgage doesn't always get provided via title. So that's where the FHFA should have it. So Bill Pulte should have it. And this then raises the question, is Bill Pulte right? And is Lisa Cook a fraud who got a loan estimate as a vacation rental? Then I guess her and her lender turned around and said, you know what, let's just defraud everyone and call it a primary. Because then since it was disclosed, it would take both Lisa Cook and the lender agreeing that she was changing her mind, right? It's a little bit of a higher standard. It could happen. Or maybe the lender made a mistake. That's possible too. Again, either both of them are frauds, the lender and Lisa Cook, or a mistake was made, or this was a second home. And this all gets cleared up when we actually get the mortgage documents. And so until we actually get the mortgage documents, I personally think you've got a court here that's going to say, look, we have at least enough at this point to argue that Lisa Cook has a case. She's going to be able to get the opportunity to provide the actual mortgage documents in some form of discovery, and that means she stays, at least for the time being. Now, why does that matter? It matters because she's a voting member, right? These are your voting members, and this is how it works. Each FOMC vote. There are 12 voting members, 7 members of the Board of Governors, the president of the New York Fed, and 4 of the remaining 11 Reserve Bank members. Now, Kugler resigned in August to go back to teaching at Georgetown. Remember, Georgetown was the place where like Ivanka Trump went and Tiffany Trump went and Eric Trump went. Like a lot of Trumps have gone there. And so apparently Georgetown made Kugler, who was a voting member, a really good offer to go back to Georgetown. And apparently now she's back at Georgetown, yet she has no classes scheduled at Georgetown. She just happened to disappear as a voting member, leaving now people who are voting that Powell doesn't like Powell and Cook, who are aligned that we should go slower on rate cuts. And he's not attacking people like Waller or Bowman because both of them want rate cuts. And Waller and Bowman are basically both angling for the Fed chair job. So they're really aligning with Trump. Like, yeah, let's cut a lot. Waller's going out going, we need to cut 150 basis points. The labor market is slowing too much. So when you look at the list, they're basically just going down the list. And it's sort of one of those like, give me the man and I'll find the crime situations. And that's where people are like, Bill Pulte, like, you should have the records. Like, stop giving us half information and then trying to argue that, Lisa Cook is a crook when you have the record and you could just be like, here's the mortgage document. Like, you would just, you would win. People wouldn't be calling for you to resign in that case. Now, of course, Lisa Cook should also have the record. But remember, a lot of borrowers don't actually keep all of these documents. And they sign them, they close, they get their money, and then they throw them away. And I'm not trying to defend Lisa Cook, I'm just trying to provide that second perspective. Now, do understand as well that at the same time as this is happening, a lot of people recognize and side with Donald Trump because they want interest rates lower. Car loans, credit card loans, things are really expensive right now. And so it makes sense why people want rates lower. And this is why a lot of people are concerned that, hey, are we walking into a recession? And this is where UBS's recession forecast comes up. Now, quick note also, just to close this topic. ProPublica is also doing investigations into people on Trump's team, and they're finding that, even though these aren't Fed rate cut voting members, people like the labor secretary apparently entered into 2 primary residence mortgages in quick succession. Of course, they're responding saying that this is just a left-wing dark money hit piece that's trying to smear Donald Trump, and that Lisa Cook is corrupt. They're now calling her, unlike Lisa Corrupt Cook, who blatantly and intentionally committed mortgage fraud. Secretary Duffy, Administrator Zeldin, and Secretary DeReamer are, own multiple residences, but they've followed the law. You can see this is just all turning into political mudslinging. There are a lot of people who are now slinging around, in addition to this sort of political mudslinging, this idea about a 93% probability of going into recession. And this is because UBS found that between May and July, the hard data in the economy indicated that we are going into a recession. Now, there are a couple problems with this. Between May and July, we had the post-tariff effects that led, or are the result of a lot of people building up inventory and then less purchasing activity, which makes the economy look weaker. Now, a lot of that is leveling off and normalizing. And if you actually look at the Atlanta Fed real GDP now estimates for the third quarter starting here in September, we're actually showing 3.1% growth, actually starting in August. So August, September, what we have so far, the data suggests we're actually doing really well on GDP. Now, it's possible that half of this is being made up by artificial intelligence, which obviously we've got to really evaluate, hey, how much of AI is really a bubble? AI, you have to remember, is really pattern recognition. And it's so incredible because, we're running Blackwell chips now for House Hack because we've got, real estate AI that we're building. And what we're finding is it's a game of data. And so, if we have a data set of 50,000, I'm looking at this going, I want to get this data set to 300,000 or 500,000. I want to 10x this data set because MLs ultimately are a game of pattern recognition. The more you deviate from the actual pattern that you showed the AI and trained it on, the more you get hallucinations. So how do you reduce hallucinations? You train on more pattern sets. It's really simple, which then actually makes you scratch your head and go, wait a minute. If this is just computers recognizing patterns, is it really artificial intelligence at all? Or is it just plagiarizing patterns, which is exactly what got an OpenAI researcher killed? And if you haven't yet seen my video yet on the Sam Altman and Tucker Carlson disaster, I highly encourage you to watch that. The biggest takeaway out of that video, by the way, to me, is not that Sam Altman is maybe, don't sue me or kill me, bro, a murderer. It's that MLs are really just pattern recognizers, right? Anyway, so it's incredible. We're running, my AI team is telling me that, we have now 4x the speed of our compute, and we're using 20% of the power that we were using before by upgrading to these latest Blackwell chips. And it's insane. I think I got that right. Double check my memory on that. But it's insane. These NVIDIA chips are really good. I joke that NVIDIA chips are what is in the bag, and Supermicro Computer, a company that makes the server racks, they make the bag that people then can hold. And so I always worry that companies CoreWeave or even Iran, which I'm bullish on short term, we're just building up these massive bags, and eventually these chips will be worth less. But I don't know, man. Right now, this is a debt-fueled bubble, and these chips are actually really good. So it's kind of all right, so maybe it's a bubble getting extended by debt, but it's getting extended by debt, and it's fueling into GDP. And so for right now, Like, this is fine. And so it's no surprise that when you actually look at what UBS tells us, they actually base their recession probability at just 41%. Now, well, that is like double. Actually, I think they're 50-50. That was the credit market. Credit markets indicate a 41% chance. They're at about a 50-50 chance of a recession. And so that's because they're looking at that hard data and saying, okay, but that was summer data, post-liberation tariff, liberation date data. And, they're looking at the inverted yield curve, which, yes, is one of the most telltale signs of a recession, but really only once you skyrocket past one. So I think what we're really seeing is we're kind of in an economy of like borrowed time is the way I like to look at it, which is fine because you can make plenty of money in this. I mean, look at, for example, Bitcoin. Bitcoin regularly has these downtrend consolidations and then it always breaks out to new highs after that. We are literally breaking out right now, and we could see 130 to 155,000 Bitcoin very, very soon. Like, I don't think this debt-fueled bubble is really going to slow down anytime soon. Now, there are other plays that make a lot of money in this, like, either slowdown or recessionary direction. And of the top 10 stocks to buy that I'm bringing to course members in the Alpha Report, which you get with the Meet Kevin membership, right now, 3 of them, and probably that's going to be all of them, but 3 of them are like huge beneficiaries if rates either slow down, like slowly come down, or massively get cut. Like, these companies win big, and so far they've already been doing really well. Like, one of them was up, 20% Thursday or Friday. The other one was up like 4 to 12% on Friday. I can't remember exactly, but these were doing really well. I do caution against Open Door. I think Open Door's, peaked a little bit now that we've got the CEO placed. And now the Shopify exec is going to have to basically prove that he can turn around this Open Door model. Maybe if you want, leave me a comment. I'll make a whole breakdown as to like what Open Door should do. As somebody with real estate and financial background, I feel like I could give some good insight here, but I don't know if anybody cares. But there's a lot that Open Door could do. But really, when you look at this 93% chance of recession, I think it's a really good clickbaity headline. But the reality is we are, yes, on borrowed time, but we're not yet like so high in shock territory that we really need to be nervous. Yes, we're in shock territory. Shock territory starts at 50, but the soft landing of the mid 90s got us to 60, and we never had a recession. So we're just in like the early innings, and this could keep going for a while. This sort of like Nike swoosh recovery. It is too early to call an end. The end will come, but not yet. So this has been coming down. It's been coming down because we now anticipate a 100% chance of a 25 BP cut, only a 4% chance of a 100 basis or a 50 basis point cut on September 17th. Obviously, I'll be covering that in detail. And a lot of this is because, bond markets are like, all right, cool. Yeah, we're going to get a supportive Fed now. Now, Fortune has been talking about mounting warning signs. However, there are a lot of metrics that turn negative. This is per UBS, that indicates we are seeing softness that is a mile wide, but an inch deep. So basically, nothing is showing a rapid unraveling. It's rather a soggy, soft, weak, but not collapsing environment that we're seeing. Fine. And that's why they are only indicating, there it is, an aggregate recession probability of 52%. And that's for July. That's probably down now. Now, Jamie Dimon is also talking about the potential for a recession, but he also says and admits, like, hey, this is either a recession or a slowdown. We're not entirely sure. We're just going to kind of like assume that we're going to put the bank in the best position we possibly can and just keep trucking along, which I feel like is what everybody should be doing. I'll look really quick. Yeah, it looks like we got 2 Meet Kevin membership coupons left. I tried to time that where they would align with the expiration 11:59. I'll probably just expire it. But anyway, shout out to those of you who joined: John, Elias, Ematas, Juan, Sergio, Brandon, Hud, Eddie, Joey, Tom, Derek, Michael, Robert, Natalia. Hey, what? It aligns with roughly 1 in 10. Shout out to the ladies out there. But yeah, broadly, I don't think that, this week, just sort of an economic recap, this week we did get low PPI, but again, that was probably because of a slowdown in wholesale trade services, which makes sense. And then we did get CPI that was basically along expectations and a slight rise in claims, but none of this is like, indicative of like falling off a cliff. In fact, in my alpha report, I said that the data we got this week is modestly bullish on the Qs. It's not like euphorically bullish, but modestly bullish. And I mean, look at what we did this week. We modestly rose day after day after day after day. Like if you zoom out and average out what we saw this week, it was basically straight up. So modestly bullish wins again. And I think this continues. I'm also very excited to see what's happening at Tesla. I think a lot of this is because the comp plan is getting set up for Elon and robotaxi slowly expanding. I think we're getting to these levels where like, hey, it makes sense to maybe, especially once we get to 414, start thinking about tightening some limits because valuations are high. But I always like trailing stop limits because they protect you in the event you do roll into a recession, which we'd have to get some crazy data, but don't make them too tight to where you're getting stopped out on normal fluctuations. But I think you still got another $20 to go here before you got to worry about a line. And beyond that, like we know what we're going to get at the Fed meeting. At the Fed meeting, if you think about it, we're going to get 25, big deal. And then on top of that, I mean, we'll be breaking down all the catalysts and my take on how to play them for trades. Obviously, I can't guarantee that in the Meet Kevin membership, but I can't guarantee the result. But I think we do a really good job. I think overall, like our win rate is very high. And so I hope you can make lots of money. But, we are going to get retail sales this week. We'll get import-export prices. So we'll be setting up strategies for trading around this in the Meet Kevin membership. Remember, you buy it, you get lifetime access. We've got initial claims. They're expected to come down from 263 to 240, which would be good because we did get a pop in initial claims this week. And, you don't really want to see that continue because it is recessionary. So then you've got, although it's late recessionary, right? Like once claims really pop off, you're deep in the recession. S&P PMIs on the 23rd, big deal. We'll get capital goods, we'll get PCE, UMISH. Jolts on the 30th, big deal. Probably get PCE on the 26th. Yep, there's PCE on the 26th. Big deal. Honestly, like none of that's going to matter. And then we've got Halloween. Oof, it's coming fast here. I think the only way you're going to get TLT over 100 at this point, because it'll probably stabilize around 90 where it is now. I think the only way you end up getting TLT over 100 is if you get the jobs report at the beginning of October, just crashing, like going negative. Then we'll have TLT over 100, and then we'll talk about Halloween at that point. We're gonna dress up as. But ADP unemployment change, we don't have a survey yet. That comes out on October 1st. Man, that's crazy. It's almost October. I feel like this year is just like evaporated on me, frankly. Then you've got payrolls. Yeah, no estimate yet on October 3rd. And I mean, those are going to be the clutch ones. You don't actually have the Fed. And then you've got CPI on the 15th. You don't have the Fed in October. So it's all going to be like that first and third for jobs. So, that's what we're going to be looking at, post Fed here. And again, like I said, between now and the beginning of October, the 1st and the 3rd, I don't see really big negative catalysts. It's not like we've got big earnings to worry about. It's not like we've got, a big jobs report to worry about. We already got all that bad news. So it's chill. And usually when it's chill, we just optimistically move up. And I think that's what you're seeing with Bitcoin. By the way, all of these lines are drawn on Webull. And that's why I do think it's cool that they're doing this 2% deposit bonus right now. Remember to sign up at meetkevin.com/Webull. Get your life insurance in as little as 5 minutes at meetkevin.com/life. And then use that banking. Check them out. Check out that banking provider, meetkevin.com/bank. And if you want $30, like they give you $30 off on the Meta glasses. And they give me $30 too. Meetkevin.com/meta. And these are all paid partnerships, obviously. But finally, like I got, like, this is not like anything special. Like Meta didn't reach out. This is just sort of the generic one that pops up. But I have to say, I've got 2 functioning Meta glasses right now. I love these with my kids. Absolutely freaking love these. In fact, have you seen the latest Tesla light sync? Dude, the Tesla light sync is so cool in the car. I'm so excited about this. I'm gonna share this on screen. I'll airdrop this, but basically the light sync is you could play music and it'll take the album art and it'll play that and sync it with the sort of light strip in the Cybertruck or, whatever other Tesla you might have that has this. And, what I like to do is I put the glasses on and then I document people's reactions to what's going on with the glasses. And I think it's great. So I'll show you Lauren's reaction here. I played her a Taylor Swift song because, Swifties obviously over here. And you'll get to see this, again, filmed with the glasses, which I think is really fun.
Rainbow colored album art. Oh. So I played him this.
Oh my God, cool. Oh, that's so cool.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.